Hello, my name is Brenda Hayward. This video is called Get a Mortgage Pre-Approval. Home buyers, since you have made a decision to make the biggest purchase of your life, make these few steps so that you can get an affordable mortgage that fits your current income bracket. A pre-approval letter lets you know that you can complete the buying process and receive the key to your home. This video includes one, pre-qualification versus pre-approval. Two, have you reviewed your credit report and score? Three, research types of mortgage lenders and loans. And four, deciding when to purchase. One, pre-qualification versus pre-approval. Take a minute and read on. While pre-approval and pre-qualifications are said to be interchangeable, they are not. Pre-qualified is when lenders have requested an online value overview of your financial backing, including your credit score, income, debts, and asset without actual proof of verification, and they do not verify the information. The pre-qualification is only a rough draft of how much home you could afford to purchase. You could receive pre-qualification letter within a few minutes. A pre-approval letter from a loan officer is when a lender confirms some of your credit history and financial information. They would perform and pull of your credit bureau file or complete a full financial verifying your financials using evidence from your W-2s and bank statements. Because pre-approval uses a hands-on approach and actually verifies some information, a pre-approval letter carries more weight with the sellers and their agents. Number two, have you verified your credit report and score? A loan officer will ask for a copy of your credit report to see what debts are listed there and what debts you have not listed on the list given to them. They also want to see your payment history and what collections were made by you partially or fully and they have been closed. Loan officers utilize the credit bureau information on your credit report to see what credit score you have generated with them. The higher the credit score, the better. The reason the lender pulls your credit report is to see the generated report score on how you repay your loans. You may not generally see a copy of your credit report unless you request a copy from the credit bureau yourself. Please do your homework because you need to know how the upfront costs that are needed to be paid in order to complete closing or transferring of the property from the seller to you as a buyer. The lender will also see the down payment and closing costs on hand to complete the transaction. Number three, research types of mortgage lenders and loans. Buyers, please research at least three lenders to see which ones will assist with approving a loan. This will enable you to compare mortgage payments and interest rates offered. There are three main types of mortgage lenders. They include one, mortgage brokers, which is another word for mortgage bankers. Two, direct lenders, banks and credit unions. Number three, secondary market lenders, Fannie Mae and Freddie Mac. There are six types of mortgage loans which one may qualify. You must be checked by your lender. The types are conventional, jumbo, government insured, fixed rate, adjustable, and if you private military, VA loans. Lenders can assist with deciding which one fits your needs best. Four, deciding when to purchase. Buyers, if you actually ready to move, pulling the trigger early by going to the lender and getting a pre-approval letter should be timed. The pre-approval letter only lasts 60 to 90 days before they will have to review all your information again. Research and find a real estate agent during the pre-approval process so you can start immediately reviewing homes once a pre-approval letter is received. The pre-approval is painless because you know that the lender needs. However, you should try to avoid it by saving you time. Get started reviewing once the pre-approval letter is in your hands. Just to let you know, I am not a real estate agent, accountant, lawyer, or loan officer. Please let me know if you like this video by clicking a thumbs up, subscribing, or leaving comments below. The rest of this video includes 5. Financial documentation, 6. Loan application, 7. This is not the time to go shopping. 5. Financial documentation. If you plan on meeting with a loan officer to apply for a mortgage against the property you would like to buy, or you want to find out how much you can afford to purchase a house for, loan officers need these required documents to start the process. These forms will show the proof of income and the down payment to allow you to move forward with the home buying process. Pay stubs or other proof of employment if you work for yourself, bank statements, at least 2 months. Retirement account statement only if you will be using this money as part of the down payment or closing costs. Any legal declarations like bankruptcies, liens, divorce decrees, tax returns for the last 2 years, gift letters from whomever will be helping you purchase the home, or if you don't have a copy of your tax return, Form 4056T can be given to your loan officer to request a copy of your taxes from the IRS. Number 6, loan application. Buyers, every lender have similar forms to apply for a loan. However, all the information is self-explanatory. Just take the time and follow directions and submit the documents. You should hear back from the mortgage lender within a few days to let you know if you are or are not approved to start the home buying venture. 7, this is not the time for shopping. Buyers, once your information is submitted to the lender and approval, this is not the time to purchase anything besides spending your money on the monthly bills and groceries. This means believing that you were surprised at the credit store and think it's a great time to put those credit application in. Please don't, or even change jobs. The information on the application would need to be updated, and those changes will impact current pre-approval numbers. Just a heads up, many buyers disregarded this information and put in letters to their landlords and sent out change of address cards, and they did not get to closing because they utilized their credit during this holding period. Your credit will be checked the same initial way 3 to 5 days before closing. If any changes has been made, you will not go to closing. Please let me know if you like this video by clicking a thumbs up, subscribing, or leaving comments below. My name is Brenda Hayward, and thanks for your time.